All right, Rima, thanks a lot for that. Well, Mayuresh Joshi also joins us, and Mr. S.P. Tulsian is also with us. Of course, we have been talking to Ashwini and Mitesh. Mr. Tulsian, okay, before I get Mr. Tulsian's thoughts, Mayuresh, I wanted your thoughts first on Crompton Greaves. How would you approach that stock?
Afternoon, Anuj. Again, I think with the developments that are taking place, one really needs to understand what actually transpires over the next day or two. Largely with the deals that were expected to come through, the international T&D deal with an EV of close to 115 million euros. They've also signed the automotive deal for almost 120 million odd euros. So in that sense itself, I think if these deals do go through, and there's a big question mark that what really happens specifically with the T&D deal in the next day or two, I think that uncertainty is looming large onto the stock. But if one assumes that it does go through even at lower valuations, there will be substantial reduction of debt. But again, I think one needs to largely wait and watch the developments that take place. So I think it's a wait and watch mode for me. I think let the developments take place. If the valuations probably come a little bit lesser, I think the markets have given the reaction that they have right now. But if it's cancelled totally, my own sense is that the beating of the stock might very well continue because the EPS estimates get cut significantly. So largely I think wait and watch in terms of developments taking place over the next couple of days.
Okay, well, some consumption stocks are really picking up pace now. So Asian Paints is your top gainer, up almost about 4%. But it's had these volatile runs. When the market moves up, it sees a recovery. But when the market sells off, it sees an equal amount of pain. But today, Asian Paints is up about 4%. M&M is the other one that's picked up quite a bit of pace now at the high point, up more than 3% or so. Ashwini, wanted your thoughts on some of these auto names now. How do you trade them? Names like M&M, Hero MotoCorp, etc.
See, Mahindra remains in a downtrend. Today is a strong pullback rally. Unless you are a very, very long-term investor, I don't think Mahindra is worthwhile. But Hero Moto, Maruti, Bajaj Auto, Eicher, I think these are stocks which are holding on while the market sells off. That just shows relative strength. Whenever there is a turnaround, chances are these stocks are likely to turn around before the market.
Okay, well. The stock of the moment right now clearly is Sun TV, and that stock is now up about close to 10%. That's the stock market for you, absolutely ruthless, and just focusing on stock opportunities. Ashwini, what are the next levels here, Sun TV?
Again, the stock is assuming certain things. If that happens, I think it's probably bottomed out because it's taken out the highs of that big down day we had, and 565, 570 should be easily done, and the stock basically would bottom out, and once 560 is crossed, you could easily see another 200 points on the upside. So this is the time to probably get into Sun TV and hope for the best.
Okay, hope for the best. Well, Mayuresh, yeah, go ahead.
Yeah, of course, you would want the best, Sonia. At times like these, and your heart does go out to the chief minister, and you would want to hope that things stabilize. But I think the market's focus right now is correcting years of underperformance, because if you remember what happened under the DMK tenure and compare it to what's happened to the stock under and even company's performance under Jayalalitha's tenure, that is clearly something that the market is betting on, or at least stock investors are betting on. Also keep in mind, Jayalalitha has been in hospital since September 20th. After that, you had seen the stock go up to as high as 580, and after that it had slipped. So what you're seeing right now is again recouping of that rally. So that's just one point that I thought I would make out.
Okay, definitely that point is well taken. Let's take a short break. We'll come back and have lots more time to discuss the markets. For now, not much happening. Yes, the market has recovered to the high point. We are seeing the Nifty above the 8100 mark, but it's been stable there for the last 15-20 minutes. Our closing bell money control question of the day is the risk of the Eurozone breaking up back on the table for the market? Log on to moneycontrol.com, post your responses there, and we will read out some of the most interesting ones post 3:30. Coming up on the other side, the Italian Prime Minister Matteo Renzi resigned after suffering a heavy defeat in a referendum over his plan to reform the constitution. Nick Parsons of National Australia Bank will join in on the other side to assess the impact on equities. welcome back. It's still looking good for the market, so it's still up about 0.4%. The stock of the moment undoubtedly is Sun TV, now up almost 12%, and big volumes getting traded on Sun TV this afternoon. But apart from that, you have some other stocks too that are looking good. So names like Trent are up almost 11%. Big volumes on Trent at this point in time, and that chart should just be up for you in a minute. And you also have names like MRPL looking very good, up almost about 7% there, and NMDC is another stock that's buzzing at this point in time. What's also looking good is the European markets, because most of those markets have actually inched into the green this afternoon. After the early losses on Renzi's resignation, it seems like they've put that event behind them, and now most European markets are well in the green, actually up almost 2%. Nick Parsons, the head of research UK and Europe of National Australia Bank, joins us on the phone line from London to talk about that. Nick, do you think that investors have put this event behind them, and do you reckon that there could be more gains, especially for the European markets?
Well, good morning from London. It seems that we're following the same playbook that we did on US election night, where there was a move very sharply into the red and then quite a stunning turnaround. And perhaps that is now the template for these major global events. So we have got a situation where only 3 hours ago the S&P futures were down 7. They're now up 9, and the DAX in Germany, which was down 100 points, is now up 180. So it is very much a rerun of November the 8th at the moment in Europe.
Nick, hi, good afternoon. And maybe even the Brexit Day template before that. So shall we now make an assumption that this market is now prepared for more bad news out of Europe? Possibility of euro breakdown, the euro dollar going below 1. And if these events actually happen, there will be more of buying opportunities for equity markets?
I'm not so sure I'd rush to that conclusion for equity markets. I think what does seem to be the case is that markets were very much more prepared this time around, because of course you mentioned Brexit and we mentioned the US presidential elections. It would have been a brave or very foolish investor who didn't at least have some form of downside protection in place just in the event of a catastrophic vote in Italy, followed by an equally catastrophic collapse of the banking recapitalization, which is currently ongoing. So I think the markets were better prepared for this one, and that probably explains why the downside initially was relatively limited, and we did see such a turnaround. But I would say that I think the outcome of the banking recapitalization should be front and center stage from here, because if there is any sign that is faltering or indeed failing, then that is going to be an unexpected negative for investors right now.
Do you think that the FOMC meeting next week will also be a non-event of sorts, purely because everyone is expecting a rate hike, and it seems like that's baked into the markets now?
It would be simply staggering if the Fed were either to do nothing or to do 50 basis points. Having spent all year passing up every opportunity to raise rates, it would be quite incredible for them to go 50. And equally, it would be nonsensical if they were not to move at all, having got the market exactly to fully discount it. So the Fed ought, and I use the conditional tense, the Fed ought to be a non-event for markets. What, of course, we will be focusing on there is the fact that we get new economic projections, we'll get a new set of dot points to agonize over and to analyze over the coming days. So I think the Fed ought to be one of the least market-moving events over the course of the next few weeks, but their capacity to surprise and their capacity to foul up communications should never be totally ignored.
Okay, Nick, the other big point that I've been asking experts is this whole DM versus EM trade. We have seen the US markets, of course, keep hitting all-time highs. Do you think that's run its course, and is it time for emerging markets to bounce back, or do you see more outperformance for the developed markets?
I think what we'll see is investors continuing to watch currency movements, because we often, we always stress that when the currency and the equity markets are moving in the same direction, then that is the basis for a sustainable rally. And I think at the moment we're just in that process of forming a bit of a base, it would seem, in EM currencies. In India, we've come down from those all-time highs in dollar rupee just a couple of weeks ago when we were trading above 68.80. We've managed to stabilize on a 68 big figure. If that stability can then morph into a bit more of a general outperformance by EM currencies, then that would be the sign, I think, for investors to move back into the equity markets. But I think the first clue has got to come from the currency. So unless and until we see a bit more of a sustained uptrend, and it's certainly encouraging the price action that we've seen in some currencies, not least your own, but until we see that rally being extended, it's probably too soon to make the call into EM equities.
Okay, Nick, thanks a lot for giving us your view, and we will touch base with you once these big events are over, just to get a check on what your view is once again. That's the word coming in from National Australia Bank. They believe that the Fed meeting will be another non-event because everyone is expecting a 25 basis points rate hike, and that's pretty much what will come through. For the market, we're still hanging on to gains of about little less than 0.5%. Sandeep Wagle joins in now to give us some last hour strategies. Sandeep, what are you recommending to trade in the last half an hour?
Afternoon, Sonia. I would go with a buy in a CEAT, stop loss 1245, target 1296. A buy in a Sun TV. A lot of the move has already come in, but still there is some more upside. Stop loss of 465, target 495. And a sell in a Crompton, stop loss 72, target 63.
Okay, that's two buys and one sell call. The market has again given up some of the gains. It's going to be that kind of market actually, as Ashwini also pointed out. Let's pull out the intraday chart of the Sensex and the Nifty. You can see that from the high point is a bit of a slip that you have seen, and in terms of stocks, Sun Pharma and HDFC clearly dragging the market again. Ashwini, HDFC is seeing selling at every recovery. I mean, it's become a very weak stock. What's the target here on the downside?
Well, it's broken its 200-day moving average, and if it continues to sell off, maybe 1080, 1100, those are zones where it generally finds support. But it all depends on the FIIs turning their view. The day they turn their view, HDFC will turn. I think it's a good gauge of what they are doing. But overall, I don't think it's a good time to sell it. Possibly long-term investors should try to accumulate, because as and when FIIs turn, you could get 25-30% here in a hurry.
Okay, well, discounts are mounting in the wake of demonetization. First, it was Maruti that gave discounts on a lot of its vehicles last week, and now Tata Motors has decided to offer discounts on Zest, Bolt and the Safari models. Generally, companies offer discounts, year-end discounts, because, once you get into January, nobody wants to buy the last year's model, so they try to get rid of their inventory. But this time around, there's an additional effort being made to push their inventory because of demonetization that has hit their demand quite a bit. So first Maruti, and now on a slew of their models, Tata Motors has also gone ahead and increased their discounts. Well, sign of the times, I guess. But Mayuresh, from the auto space, any top picks here? I know you like a lot of these companies. Anything that you're buying right now?
Now again, Sonia, I think, as you rightly pointed out, because it's the year-end scenario, I think the level of discounting is going up. More so, again, I think, because of volumes drying up in these last 2 months because of the demonetization effect. But again, I think, qualitatively, I think the companies have corrected from the highs that they had made, and valuations did look expensive. Now, the correction that has come through, and if further correction does come through over the next few days, I think the four-wheeler is one space that I'll really be very, very optimistic about. For example, I think, look at Maruti. I think the kind of models that they've launched and introduced, Baleno, Brezza, has been doing exceedingly well. The kind of discounts that Maruti is giving and eking out, I think if that increases their volume to a certain aspect, and that will come to know in hindsight over the next 2 months whether that really played out. But again, I think valuations have contracted, and if Maruti contracts from the current level 4-5%, I think it will become a decent entry point for long-term investors. Similarly, in the case of Tata Motors, I think the kind of correction that we've probably seen and the kind of discounts, if one has us to believe that I'm right now seeing on the ticker. I think if those discounts are expected to come through, I think yes, you will see some amount of average selling price realization go down. But again, I think if that stabilizes volume specifically on the domestic front, I think it might give support to earnings FY18 onwards as the currency starts normalizing. So again, I think the four-wheeler space, something like Maruti, if it corrects further from the current level, look attractive. Even Tata Motors to a certain extent, I think if it corrects further from the current levels, becomes a good starting point for long-term investors.
Okay, Mitesh, wanted your thoughts on IT stocks. Distinctly weak today, some of them at least. Is this space now going to break the previous lows? Stocks like Infosys, TCS?
See, I'm not very sure of that, but it does appear that I think some kind of pullback has been sold into. The indicators is sounding some showing some kind of positive traction, but the price needs to confirm. So I would want to see the CNX IT get past 10,000 or 9950 levels. If that was to happen, I would still look for more of long trading opportunities. I think most of these stocks have completed a big down leg and I think are just trying to stabilize, barring a TCS, which for some reason I think looks like might break the earlier low.
Okay, gentlemen, stay on. We need to take a short break. Things are not moving much. It's just slightly, topsy-turvy for the market, but not something that we can't handle. For now, it's still up almost about 0.3%. But since it's Monday, on the other side of the break, we'll get our Monday special Mid-Cap Mania with Nigel D'Souza. Stay tuned to find out which stock is on his radar today.
Welcome back. Well, it's a positive day. That's the key takeaway. Today the dip has been bought. That's the key takeaway for the market. At higher level, of course, there's still a bit of a struggle. Ashwini and Mitesh still with us. BTST time. Buy today, sell tomorrow. Ashwini, you go first.
I think Britannia is a sell, is a buy with a stop of 3,000, target of 3120. Yes Bank from the banks looks fairly strong. That's a buy with a stop of 1160, target of 1210. And Hindalco is coming back after 4 or 5 down sessions. So that's a buy with a stop of 169, target of 180.
Okay, and Mitesh, what about you?
I have a BTST on Lupin with a stop at 1590 for targets of 1552. And Amaraja Batteries, that's a STBT quote. So sell now and try to buy it tomorrow. Sell with a stop at 920 for targets of 896.
Okay, guys, we will come back to you in a bit. For now, we are just focusing back on the markets. It is still up almost about 0.4%, so not moving anywhere. Those are some tweets coming in from Sangeeta Reddy of Apollo Hospital saying that despite our best efforts, our beloved Chief Minister remains in a grave situation. Things are not looking good for Jayalalitha at this point in time. We'll keep getting you regular updates that we get on Twitter and on our wires as well. But it's time now for our Monday special Mid-Cap Mania. And Nigel is here to tell us what stock is on his radar today. Nigel, take it away.
Well, Sonia, in these volatile times, I picked up a very small company, 110 crore market capitalization company. It's known as Thamboli Capital. It's basically into castings. It has a 100% subsidiary. That's Thamboli Castings. And in fact, it's an auto ancillary company. What does it do? It makes complex castings that are used both in the auto space as well as in the non-auto space. And it has its unit in Gujarat. Roughly around 9 to around 10 acres is what they've set up the plant on. I've been listening to you, Sonia, and you've been telling us, which company gets affected by demonetization, which doesn't get impacted by demonetization. So best if, a company is involved in exports. Now, this company, as per the last year, they export close to around 93% of their total revenues is got via exports. So that's something that, demonetization won't play a big role. Further, if I just look at their, who are their clients, the big clients include the likes of Bosch, and this is the international company, Bosch Global, as well as Siemens. So from the auto space, their biggest client is Bosch, And in fact, in the non-auto space, it's Siemens. Autos and non-autos is roughly in the mix of around 50% approximately. The other striking factor from their balance sheet is that they've been steadily paying back their debt. And if you take a look at the last results, that's of September 2016, the total cash in their books was around 15 crores. Equated to the market capitalizations, it equates to nearly around 11% of the total market cap. So that's another factor. This year has been a good year, and that's primarily why the company caught my eye. Top line, not a big growth. Operating profit was up close to around 30%. So they're doing something right over there. Automation seems to be coming into play, and the profitability as well has jumped up. Now, in fact, they're doing close to around 5.5 crores in the first half of the year itself. So those are the numbers up for you on the screen. But let's see what they've done in the last few years. The revenue growth hasn't been great. They have been doing roughly around 50 to around 60 crores. So nothing really to take home over there. But the important part was this first half of the year, they did a margin of around 30%, which is very positive, because in the last few years, they've been hovering around the 23% to around 29%. So 30% is better than what they have been doing. The primary reason why the profitability has jumped up, though, is that interest cost has come down from around 2.5 crores to around 60 lakhs over the last few years. They've been constantly focusing on deleveraging their balance sheet, and the profitability numbers as well should come up for you on the screen. Last year, they did 6 crore 80 lakh in the full year. This year, in the first half of the year, they run around 5 crore 50 lakh. So that's something you should keep in mind as well. What is the promoter holding at more than 50%? I tried to reach out to the management. Unfortunately, couldn't get in touch with their promoters. And in fact, LIC owns close to around 2% stake in the company. NRIs as well, they hold roughly around 4.5%. That could be a good, or maybe something that you should look at as well, because I don't get the names of these NRIs. Finally, such a big exposure to the international markets, foreign forex fluctuation will play a role. Maybe too much of their business with few clients, like primarily Bosch Global as well. And finally, I was going on reading all the audit reports. They're saying we're looking to increase our domestic revenues, but that clearly hasn't increased, because it's roughly around 7-8% only, though they have mentioned clients like Maruti as well as Tata Motors. Back to you all.
Right, Nigel, thanks a lot for that. Standard disclaimer, this is not stock recommendation. This is one of the few stocks that Nigel has spotted in terms of interesting tidbits, and that he does every week. Let's do one thing. Let's get an insight into dealing room chatter as well. Mangalam Malu is here with Trader Talk. Mangalam, what's the feedback?
Well, Anuj, the clear feedback is the recovery that we saw in our markets is primarily on account of the rebound that we saw in the European markets, which have gained anywhere between 2 to 2.5% from the low point of the day. Though if you look at the cash volumes, they have been low, and the dealers tell me that the up move is primarily on account of higher impact costs. They said that a large order could move the prices here and there as far as the markets are concerned. The institutional flows, especially from the foreign side, are mixed, while domestic institutional investors are buying select mid caps. While we are seeing some sort of volatility in the markets, the traders are advising caution to their clients, and they're saying that going forward there is an eye on the RBI as well as Fed policy meets. So until then, there is some volatility which is expected.
Okay, Mangalam, thanks a lot for that. Sanjeev Bhasin also joins into our discussion, and we are winding down in the last 20 minutes of trade. Sanjeev, hi, afternoon. Looks like the consumption space has put at least part of the demonetization damage behind it, because we're seeing a good recovery in auto stocks, in paint companies. What does your buy list or your shopping list look like now?
Yeah, hi. So 5 stocks which we have on top of our list, which we used on that decline to 79.50. Top of the heap is the Asian Paints, closer to 900. Second would be Maruti in that band of 47.50 to 4800. Third would be Bajaj Auto on that band of 25.25 to 25.50. Fourth would be Tata Global, closer to 117. Of course, you have to review it once it moves up. And fifth is United Spirits, closer to that 17.50. We think these 5 are the best consumption plays spread over the gamut of the 5 best sectors, where you can get a lot of value for the buck, because these are pedigree names with very good management, and despite that 1 quarter hiatus, we think, Sonia, they can rebound faster than they fell.
Sanjeev, hi, good afternoon. I remember, a few months back when the market was at 8,900, you had stuck your neck out saying that you would wait till 8,200, 8,300 on the index. Are you fairly sanguine that this is the bottom for the market, or do you have to revise that target lower?
Yeah, so Anuj, thanks for the recall, but yes, now fear, when it's played out, is the best time to buy, because the fear can overextend itself. Pessimism is always greater than optimism, and that's why on the short side you generally bears tend to make more money because of the fear factor. We think a lot of that is already played out. I can stick my neck out. I don't see 70, 150 or 78.50 also getting broken in this fall, and we think first you will get to 85.98 or 8600, and then we will review it from there. But like we said, we are using this fall below 8,000 very, very aggressively to actually add on to good pedigree stocks where we are getting value for the buck, and there is a lot of pain which was, say, in the NBFC or a lot of the financials, which is now going to play out on the positive side on the back that the low cost of carry and rate cuts across the board are going to be the name of the game.
So you don't see any value for the buck in any of the cement stocks? I mean, Ultratech Cement, for example, has recovered from 3,300 to 3,600 before you know it. Any picks there?
Yeah, so Sonia, we'll give you 5 large cap names in 5 sectors which we are overweight on the Nifty. First would be Maruti. Second would be Hindalco. Third would be like your top pick, Ultratech. We use this 3,400. It has been one of our top picks all the way from 2,700. And above that 42, 4,300 we booked profits or advice. We think this is a this is the best time to buy Ultratech. Fourth would be SBI and fifth would be Dr. Reddy. It will cover most of the sectors and quality names in the Nifty which you are actually looking to buy, but you're bereft for ideas. So yes, like you said, I think Ambuja at 190 was trading at what, 1111 or 1112 EV dollar to value. And the JP deal got done at 117. So from 170 these stocks corrected all the way down to 112, and I think Ambuja also would be likely to be re-rated around those levels.
Okay, point taken. Let's do one thing. Let's go across to Varinder as well for a list of buzzing stocks. Varinder?
Well, new names. First is Comfort, Commotrade, Coral India Finance, and Killpest India, which are buzzing in the day-to-day. In the small cap gainers, there's a particular list of all these smaller IT companies, or you can say, some other companies which are associated with, the cloud computing and all. So Cossin, Take Solution, Intense Technologies, Vedavag, Cybertech, Trigen Technologies, Vrinichi Technologies, all are up anywhere between 5 to 15%. Lotus Eye Care, Somi Conveyors, Visa Steel, JBM Auto, Indian Acrylic, Chemfab Alkalis, TCF Finance, Madhukan Projects, Taich Industries, Prima Plastics, Borosil, Gujarat Borosil, Orient Refractories, and IFGL Refractories are also buzzing in the small cap space. Among mid cap gainers, if you're watching out for some of the stocks, like look at Aries Agro. Trend has seen huge volumes today, nearly 10 times 10-day average. The stock is up by nearly 10%, and Allsec Technologies has been doing well on good volumes. Venkis was up 8% last time I checked. Peninsular Land, IFB Industries, MRPL. Some losers today, Prakash Industries of course, but look at TV today, which is down 8%. Dredging Corporation, bad results. PNB Housing Finance was down 6% one point of time. Seton Credit Care lower 5%. Circuit, Maya Steel, and HEG.
Varinder, thanks a lot for that. Well, many market experts believe that the market could see only upsides from here, and the worst perhaps is over as far as demonetization is concerned. Prabhat Awasthi of Nomura is one of them. Listen in.
Given that we have fallen, from about 8,900 or 8,800 levels, a large part of the risk is baked in. So you might have very limited downside from here. But till the time your, the certainty on what happens to the economy sort of emerges, market might hang around in balance around these levels. I personally do think that's going to be slightly less pronounced. It'll be more short-term in nature, maybe 2 quarters impact, and therefore there will be a recovery post that going into next year, especially in FY18. If the rates do get lower, then some of the discretionary will start to come back, I guess, simply because of the fact that banks will be flush with deposits and they'll have to figure out ways to sort of push this back into the system. The short-term outperformance we've seen this year also is because of the fact that the rest of the economy took a hit.
All right, now for a CNBC TV18 exclusive, let's cut across to Shireen Bhan, who is in conversation with the chairman of Vedanta, Anil Agarwal. Shireen, over to you.
CNBC TV18 special, I am joined by Mr. Anil Agarwal.
So I'm very hopeful. I was with the Chief Minister, I was with the government official. They given me.
Okay, that's Anil Agarwal, always bullish. We are talking about metal prices, talking about oil prices, and the fact that he has seen probably the worst phase and believes that things could look up from here. We'll take a break on that note. Up next, of course, we'll get towards market closing.
Hi, welcome back to the show. Well, we just have about 8 more minutes left for the markets to close for the day, and it will be a good close, definitely. The bulls have, sort of won this round at least after all the volatility that we had last week, and the Nifty will close above the 8100 mark, which is a good thing because, you have the Bank Nifty which has surged today. So at least, even amidst all this choppiness, at least there is some bottom that is being formed.
Oh yes, Sonia, and I think this market is now telling you that at least from the European point of view, one risk is slightly off the table now. With the Italy move out of the way, and market not reacting too much to the dollar surging and euro falling. Also now you're headed towards policy. The problem with policy is that now you have factored in a rate cut. Post the event, you actually see the market declining a bit. That's something that you'll be watching out for. But today's been a good day. And the fact that intraday dip was bought into is telling you that it's not just a sell on rally market, and the rally has not been sold into. That's also the good part about today's day.
Oh yes, and you have a sectoral move, a secular move that you're seeing, consumption stocks, metal stocks, banking stocks, all looking good. But as we said, we have been used to this many volatile days in the market, so don't get carried away by moves either way. But we're counting down to the last 10 minutes of trade, so let's get some final comments from our guests. Ashwini, Hindalco is a stock that's really moving now, 3.5% higher. Volumes are piling up on Hindalco. This has been clearly the stock of 2016 with a gain of more than 100%. Do you see more rallies from this 174 level?
Well, Hindalco remains in an uptrend while the market is clearly in a bearish phase. So chances are this time we should get to 205, 210. So today is a fresh start for the metal counters, and all commodities, metals, oil, etc., they're all showing strong uptrends. So this could be a phase where, commodity producers could do well and consumers could underperform.
Okay, but Ashwini, how do you look at a day like today? We had a nothing start. The first 3 or 4 hours, absolutely nothing. And then the market having a bit of a surge in late trade. Should one read too much into it, or would you maintain that till 82.50 this is a sideways market?
See, in a range bound market, one day will be very bad, like Friday, one day will be very good, and the market will chop you on both sides. If you came in short today, by end of the day you are losing money. If you are going home long today, you could get hit tomorrow itself. So unless 82.50 is crossed, let's not start longer term projections. And similarly, unless 7900, 7950 is broken, you can't really look too much on the downside. The market is now sideways, and that's a good thing. At least the selling pressure may be coming off, because V-shaped rallies will not lead us anywhere. Only if we find a base and the selling stops and some amount of buying happens, only then you'll have a sustainable rally that'll take place. So one day I don't think counts for a whole lot, and the move was 50 points. If it was 150, 200 points on the Nifty, that would be different. If on the Bank Nifty it was 600 points, I would go by it. But these are minor moves.
Oh yes, 50 points on the Nifty. It's just that the market has become so weak of late that bulls would take that. This clearly is a policy play. Look at the intraday chart of stocks like DLF, HDIL, some of these rate sensitives. You've spoken about Mahindra, Ashok Leyland. Some of these stocks are now trading higher. Look at that intraday surge that you're seeing in DLF. That really stands out. So real estate stocks surging at this point in time, along with auto names. Mitesh, anything stands out for you, real estate?
See, in fact, I was working on the chart of DLF itself. I think clearly, intraday bars are very strong over here. Needs to start getting past 116, 117, and once it does that, the rally could gather some steam, and 125, 126 could happen. So I think trading bets, yes. Real estate does look interesting to me.
Okay, and some of these other names, apart from real estate like DLF and HDIL, names like Ashok Leyland are also surging. So now that stock is up almost about 3.5 to 4 odd %. India Bulls Real Estate also up almost about 1 to 2 odd % right now. So these pockets or rate sensitives are looking very good. Sanjeev, we briefly discussed some banks. So you mentioned a couple of them, but wanted to know whether, it's a good idea in the near term to put any fresh money in any of the PSU banks. Private banks are still seeing a lot of attention, Yes Bank, IndusInd, etc. But any PSU banks that you would touch now, Sanjeev?
Yeah, Sonia, so our three top picks in fact are only PSU banks and not the retail banks, because we think there is a lot of downsizing in HDFC and Kotak and Indus. So for us, State Bank, Bank of Baroda and ICICI, all the three corporate lenders are going to be outperformers. We think at least a 25% upside in all three of them. You could have a 10% variation on the prices which you get in, but these are clearly going to be outperformers on the back that bond yields at a 8-year low, huge amount of cash which has come in, and the NIMs of 4% are over. They will be history. We think corporate lenders are going to be laughing their way to the bank.
Okay, just about 3 minutes left for markets to close. So let's just do a quick recap. It was a good day for the bulls because not only did the market not extend the morning downtake, but from lower point, there was quite a bit of rally, and the market actually is ending at high point of the day. And this is a market which is now, at least for now, betting on policy, because rate sensitives did well today. The two big sectors were banks and autos. Yes Bank, IndusInd Bank, State Bank of India, all of them were higher. Auto stocks like Maruti, Bajaj Auto, Mahindra, Ashok Leyland, all these stocks did well. Some of the consumption stocks have bounced back. So Asian Paints was higher, Hindalco was higher, Lupin also did well in trade today. ITC, ONGC were some of the other stocks that supported the bulls. The gains were capped primarily because of two pockets. One is IT, so Tech Mahindra, TCS, Wipro, they all were in the red, and a couple of heavyweights. HDFC clearly was a problem point for the market today, and also Larsen and Toubro was a bit of a problem point. So otherwise things looking quite good for the bulls. And of course in the mid caps we had some big gainers today, Sonia.
Oh yes, and Sun TV was clearly the stock of the day ever since we got news of the deteriorating health of Jayalalitha. A couple of these stocks, Sun TV, even Raj TV had a pretty good run today. So these are just some themes that the market was playing. 20% up move on Raj TV. Apart from that, you had a couple of these other names. MRPL up about 7 odd %. All the real estate names look pretty good. DLF, HDIL up in the green. Ashok Leyland did pretty well today. In the result reactions, you had names like Kolte Patil that gained almost about 5 to 10 odd %. So Kolte Patil, after a long time, that stock has actually seen a bit of a recovery there. A Trend, Take Solutions, IFB Industries, JBM Auto were just a couple of more stocks that ended well in the green today. On the downside though, you had Crompton Greaves, that was your stock of the day, down almost 11 odd %. HCC down about 2%, PFC down 1.5%, and NHPC down in the red as well. Alright, we have about 40 seconds left for the markets to close. Good day of trade for the market. The Nifty, by the way, is still consolidating between that 79.50 to 82.50 range, and it is having one good day, one bad day within that trading range. What could take the markets out of that range? We have a couple of important cues lined up. Day after tomorrow is the RBI policy. There is an expectation of a 25 basis points rate cut, but if it exceeds or if it surprises the market, then maybe you could see some more of a reaction there. But it was indeed a strong start to the week that was definitely led by the banking stocks, up almost about 1 odd % for the bank Nifty itself. A rebound seen from the kind of sell-off that we saw on Friday. So there goes the bell, 81.40 on the Nifty, and the Sensex up about 130 points. Ashwini, what is your closing comment for the day, and what would be the best way to trade tomorrow?
I don't think the market really is now caring about events. There is one big player who continues to sell relentlessly, and the day that selling turns around, I think we will start moving back. I think RBI policy will create some volatility, but in the broader context that may not account for too much. But once Fed is out of the way, possibly EMs could have some sort of at least a relief rally. So the big turn will only come beyond 8200, 8250. Whenever that turn happens, chances are it will happen with a big macro event. That is the direction you take. Downside, it's really like beating a dead horse. Something bad really has to happen, or bad outlook from the Fed, etc., for us to break 7900. Till then, it will be choppy, volatile in between 7950 to about 8250.
Okay, gentlemen, thanks a lot for taking us through this last hour of trade and with all your stock ideas. Our closing bell money control question of the day.